Good afternoon, everybody, and thank you very much for registering and joining us at this online panel discussion at which we're going to talk about device plus biometrics, the evolution of what we call, and we'll explain, six-factor authentication to tackle mobile banking fraud, which is on the increase, highly topical and highly relevant. And so thank you, as I say, very much for joining. The webinar is sponsored by InAuth and AimBrain, and I'm Gary Wright from Finextra, who's hosting the session this afternoon. And first, I'd like to thank the speakers for joining us today, to Luke, to Pete, and to Maxine, and I'll introduce you in a bit more detail in a moment. As I say, most of all, thank you for registering. The aim of this session is really to draw out some of the issues that we're faced with in the different organizations we represent in the roles that we have, looking at how the levels of sophisticated fraud are growing, and we've got some examples of that. And also to look at how the regulators are responding to that in terms of their expectations, driving the regulation to make this a much more harder market for fraudsters to crack. But everybody's upping ante here, and we need to look at it also from the bank's perspective. And amongst all else that they're wrestling with, what are some of the issues that we need to think about in terms of how, as an industry and as institutions in their own right, we tackle this issue of sophisticated fraud and how we respond, at the same time making this all a very frictionless, enjoyable experience for people, consumers, that are increasingly looking to do their business in a digital environment through their devices. So we've got quite a lot to cover. And I'm going to ask them, the speakers to give us an overview. But to all that is registered, just a reminder that this is recorded, so others can join in and listen to this later on. But equally, if you do have any points or questions that you'd like to raise, that you'd like to see debated in the subjects that we discuss, then do ping them in to me, because I'll be able to group them together and make sure that they contribute to the discussion around this highly topical, highly relevant issue. So we have Luke Murray, the VP from Technology Partnerships in InAuth UK, joining us. Thank you, Luke. Thanks also to Peter Reynolds, the Chief Commercial Officer of AimBrain, and also to Maxine Most, Principal of Acuity Market Intelligence. And between us all, I think we're going to have a lively, far-reaching discussion on the subject. And maybe it's worth just setting the scene a little bit. So I've asked each of the speakers to give us a sort of couple of minutes overview of some of the issues as they see it from their perspective in this market. So can I start off by let's lead off with Maxine. Well, why don't you give us a few of your initial thoughts and comments on the subject, Maxine?
Good morning, or good morning here from the United States. Good afternoon to everybody in the UK. I guess good evening to folks spread across other parts of the world. I'm thrilled to be here today. And one of the things that I think that is so interesting about where we are in looking at authentication for financial services, particularly around biometrics, which are now obviously a global phenomenon because the vast majority of us are using them every day on our smart devices, is that the way that we think about authentication, the way that we think about identifying ourselves has fundamentally changed, and I think it's going to continue to fundamentally change. When I look at the landscape of the market, and that's really what Acuity does, we are a strategic marketing consultancy and research, so we're constantly looking at how are markets evolving, how are technology developments transforming the way markets function, is that fundamentally we're going through what I see as a major paradigm shift. And what I mean by that is that the way that we think about functioning within secure financial IT infrastructures is changing. And whether we're accessing that secure IT infrastructure through our mobile device, through our computer, at a increasingly less, but still happening at bank branches or even at ATMs, the notion of authentication, the notion of what provides the foundation of the security of our interactions is fundamentally changed. And so what I mean by that is that rather than thinking about a world where secrets drive our interactions and drive our security, aka passwords or PINs, we're increasingly moving to a world where the devices that we hold and demonstrating our identity through biometrics are becoming the foundational security paradigm. And to me, this is really interesting. It's a whole new way of thinking about the way we function in the world, and it requires IT systems to change the way that they operate. And so that what happens from my perspective is this notion of identity and how we assert our identity with our devices that never leave our sides and the biometrics, which is fundamentally a way of linking our human identity into the digital world, are now driving that security, driving those IT systems. And so to me, not only does this provide an opportunity for more security, it fundamentally enhances our experience because we do not have to, have our Excel spreadsheets or our sticky notes full of passwords and PINs and all these secrets that we have to remember, what was my first friend's birthday party or who was my first grade teacher. We don't have to be concerned with those things. So it creates a situation where you can actually reduce friction and create a much more enjoyable and much easier user experience. And I think fundamentally it also offers organizations opportunities to create a greater level of customer intimacy while requiring users to be less concerned with all of those details and secrets. And in some level, it also limits the amount of PII, or personally identifiable information, that organizations have to store. Because if I no longer need to worry about all these details to identify a person, if I don't have to go through scores of personal information, but rather I'm depending on the device and I'm depending on a human being linking their human identity to their digital identity through biometrics, it's a win-win situation. It's easier for the customers. It reduces the friction, and it limits the liability in a way of the organizations in terms of the amount of PII that they have to hold. So I look at this entire technology evolution as potentially a revolution in the way financial service organizations operate from an IT perspective.
Maxime, thanks for that. You've touched on a number of points, not least of all the paradigm shift and the way the market may have to respond collectively to some of these issues, to that striking the balance between the need to manage fraud and authentication and obviously enhance the customer experience beyond the point that it is today. So some good points there that I know we're going to come back to, so thank you for that. Luke, from your perspective, I know you've got some insights on this, so maybe I can ask you to give us some overview from your perspective.
Absolutely, and thanks, Gary, and thanks to everyone on the line for joining today and taking some time. So for me, I actually think it's really, really exciting and a cool job to be working in fraud and authentication right now. If you think about the job that we as solution providers or the risk managers at banks and payment service providers or merchants have to do, you are essentially the first line of defense before law enforcement, which we know rarely get involved unless the fraud is tens, hundreds of millions of dollars. So having worked myself in fraud, preventing it for the last 8 years with Visa, Barclaycard, and most recently InAuth and American Express, I actually see a fundamental issue in the way that most of the industries, including financial institutions, tackle ever-present threat from fraud and the cyber criminal. So my view here, and it agrees with Maxine in terms of the paradigm shift that we must make, is that cyber criminals and the threats that they pose, they're like a disease. Right? And if we liken this to a disease that won't relent without a collaborative and consolidated approach from vendors and organizations like ourselves, we're going to struggle. So if we liken this disease to Ebola, right? If there was an outbreak of Ebola, what you'd have around the world is the different health organizations coming together, forming a joint collective under the World Health Organization banner and agreeing the best strategy to develop the antibodies against the disease. Once the cure is found, you'd have the antibodies distributed and administered to the affected areas, and hence your problem is solved. Now, in fraud and authentication, it's slightly different. Although we're tackling a disease, we, as the vendors, and often the institutions that we work with, whether it be a bank, a payment service provider, or a merchant that accepts some form of digital transaction, we tend to silo our data. We don't share it. And vendors that, like ourselves, quite rightly, we protect the IP around our solution, so we have the most niche solution on the market. However, to actually hit this paradigm shift, I believe we need a more inclusive approach to fraud prevention and authentication and beat this disease that's been spread by cyber criminals. So today I'm going to be very excited to explore some of the new technology that can collaboratively help to rid the organizations of fraud, but at the same time not impact the friction that goes into the customer journey. We have to be very cognizant of the fact that consumers want transactions to be easier. They're using their mobile devices more and more. That's a given. How do we do this without adding in additional levels of authentication that are cumbersome? When I look at it from an InAuth perspective and the reasons we partner with AimBrain, and obviously the title of today's webinar around 6 different options for authenticating digital journeys, and we see huge benefit from the omni-channel capability in cloud biometrics that AimBrain are delivering through their face, voice, and most excitingly, I'd say, the behavioral biometrics, and how this links with device and our data-based approach of identifying devices permanently using risk-based authentication rules and data to determine the legitimacy of a transaction or a device, and then two-factor messaging. So between those 6 different options there, what we're enabling banks, financial institutions to do is choose how their workflow around authentication and fraud is implemented and make the most efficient, most secure, and most friction-free digital journeys. So that's my viewpoint. Look forward to talking around how some of the regulation will influence that later on, and I'll hand back over to yourself, Gary.
Luke, thanks very much. And I think it's important to be clear about the definition of the 6-factor authentication here. In fact, it's one of the early questions that's come in, so I hope that we've covered that off, and we'll again be discussing it in a bit more detail later on. And again, you set the scene well there in terms of not just looking at some of the sort of institutional issues, but the collective challenge that the industry has. Again, points we're going to come back to. So just to sort of square off this first part of the session, Peter, let's hear from you on your thoughts on some of the issues driving this whole device plus biometrics debate.
So it's always interesting coming third, because obviously I don't want to repeat anything that my colleagues here, Maxine and Luke, have already done. But hello everyone, it's Peter from AimBrain. Interesting points that have come up already, and I'm going to add 2 to them. So firstly, AimBrain brings in a lot of focus into the whole identity part. So AimBrain is what we call a BIDaaS platform, so a biometric identity as a service platform, which use different modules of biometrics and deep learning and all that great stuff that we'll talk about later. But our aim in life is to help, in this context, financial institutions identify who is actually using the, in this case, mobile device. So we'll talk a bit later on when we go into some detail about how unique it is to be able to secure the device and then make sure the right person is using that device. And we're seeing that as something, you're talking about a global phenomenon, we're seeing that more and more, especially as we move to more and more mobile banking and move away from branch banking and in-person banking not being the flavor of the day, and how can we deliver services digitally. So we've seen more and more banks come and speak about that. And, you know, that's really come at a time where there's a number of different regulatory changes, such as open banking, PSD2. This has kind of opened the door for a number of different types of competitors to the standard banks, and everyone looking at how they can service those clients quickly without actually any face-to-face interaction. And we're also seeing a big trend in the market, which is a move from, I suppose, the traditional rules-based authentication. So, Pete Reynolds wants to send £20. Did he fill in his 8-digit PIN that we just generated, to a risk-based approach that says, hey, we know this is Pete, maybe because the device ID, or maybe because the behavioral authentication, or because he did facial authentication, he's doing a payment of X. We have a good enough risk profile of that person to say that, we don't need to authenticate him further. So they're the key points that I wanted to kind of add to the points already raised by Maxime and Luke, and I very much look forward to a good, healthy debate, and echo Luke's sentiments to say thank you everyone for spending the time listening to this webinar today.
Peter, thanks very much for that, and thanks to you all for what is a very good collective scene setting, and a lot of points that I know we're going to come back to. We've obviously spent a little bit of time there looking at what's currently happening from a customer experience perspective, and then what needs to happen, what should happen to make this more secure from the point of view of managing sophisticated fraud and not detracting from the current customer experience, indeed improving it. But Luke, can I come back to you for a first question as we move into the main body of the debate? And please, I do encourage everybody to keep pumping in some questions and thoughts. Can I go back to sort of first base, really? It'd be very good if you could help sort of set the scene with the sort of scale of the fraud that we're seeing today and the industry is dealing with. It's increasingly sophisticated. The tools are more sophisticated. We're seeing some of that. So from your perspective, it'd be very good, I think, if you could just set the scene with some practical use case examples of what I know you've seen in terms of the level of increasingly sophisticated fraud the industry is having to deal with.
Yeah, absolutely happy to, Gary. Thanks. Unfortunately, I'm probably going to sound like the voice of doom when it comes to the level of sophistication within fraud, because it's huge. Let me start by sort of taking a step back and looking at the trend in fraud and where it's going. So you can read one of a million different reports through different sources, but statistically, fraud is growing, regardless of what industry you're in. Each industry will publish its own report on an annual basis, and I was reading one towards the end of last year that highlighted around 57.8 billion in card-not-present fraud was lost last year across 8 different verticals and industries, which that's an incredible amount, and it suggests that we're not doing a good enough job right now. I think what we're going to come on to later on also is some of the regulation, and again I see regulation and authorities that they're trying to help, but often can inadvertently place new hurdles in the path of say a fraud and risk manager. For example, PSD2, it outlines SCA requirements or transaction risk analysis depending on the transaction type or the base fraud rate. And Visa recently implemented a new set of chargeback rules that put more power into the consumer, less time for the merchant to respond to the chargeback representment inquiry. And these regulations are all designed to improve the life of the consumer, share data, make it easier, but often it comes with fuzzy guidelines and levels of confusion when interpreting them, especially for the banks, merchants or PSPs. And I believe this is where the fraudster can capitalize on, and I'm going to give you a few examples today. So, as InAuth, we are very heavily focused on product development and research. We have teams that look at these types of attacks and develop our solutions off the back of that and build our partnerships to meet the challenges. Here's one that's indicative of state-sponsored hacking and highly organized criminal gangs. It's not just these guys, it's also, of course, your lost uncle in the depths of the Congo who has 17 million waiting for you in exchange for a small favor. So there's varying levels of sophistication. So, for example, here we've seen some malicious code recently, and this is malware being injected into legitimate applications that can be downloaded to popular smartphones through well-known app stores. And once downloaded to the device and executed, the malware can take command of that device and allow the fraudster to access a wealth of information and services through that device. A couple of examples: you could take a screen grab of that device, So if I'm in my mobile banking application, even though I haven't, there's nothing wrong with that application, the fact I've downloaded a dodgy weather app now means the fraudster is taking pictures of my banking screens with various personal information on it. These malwares can also read and send SMSs, which is horribly insecure. Banks and two-factor authentication systems still do use SMS, and hopefully PSD2 will spell the end of it. And also they'll keylog or even guess passwords just based on the movement of the gyroscope within the device, which the malware gains access to. So it can guess your 6-digit passcode to about a 70% accuracy after the first guess. The malware that I described there is actually called Supeng. Interestingly enough, it won't execute if the device is in a Russian language or uses Russian language font. So for me, this is indicative of what I call state-sponsored hacking, the Russian government sponsoring hacking to remit the profits back to the nation. And the point here for me is that given the high-level sophistication of that style of attack, what we have to think of as banks is, even if you're not seeing high levels of fraud and think that we've got everything done today, unfortunately the fraudsters are trying to get a step ahead of the providers. So that zero level of fraud or that low level of manageable fraud can quite quickly become something that's high level. And one further example that I'll give, and something I'm certainly passionate about, is this idea of text messages. So recently, towards the middle part of last year, there was a hack of German bank accounts where money was transferred overseas, and the hackers were able to use a combination of social engineering to get passwords, usernames, to give them the ability to log on as legitimate people to banking applications, and then they were able to intercept text messages by hacking the telco network and their protocol called SS7, which is used for sending and receiving text messages. So with all of that information, they were to pose as legitimate customers. Now, in the world of AimBrain and InAuth, where we're looking at things like device authentication and biometrics, this all becomes impossible, and we can relegate that SMS-style technology to the sidelines and look at more innovative, secure, and better experienced ways. So with that in mind, I think the banks have an opportunity now to look at their policies, look at their authentication methods that they've got in place. They're going to be forced to change them by regulation, and now they have an opportunity to do something new and innovative. So happy to open the rest of that topic up to conversation.
Thanks very much. I think it's really interesting just to put some practical context around this, because as you say, it's not that the information isn't out there as such, but it's reported in different ways, and the totality, the full impact of all of this is quite significant. Maxine and Peter, any thoughts to add to that?
I guess I'd just like to jump in and say, when I was listening to Luke talking, the thing that I hear broadcasting loudly in my brain is this idea of being dependent upon secrets. When you're talking about password, social engineering to break passwords and PIN codes and any other kind of secret, when you're talking about, infiltrating text messages and communications and one-time passcodes being sent back and forth, that's all because the systems are based on secrets. And that's, I think, what the power of what InAuth and AimBrain are really offering, which is we're not talking about secrets anymore. We're talking about device authentication and human identity. And that goes back to the point I was making about really this being a paradigm shift, because the systems that we've used, the methods that we've relied on just no longer make sense in the context of a massive global platform of mobile devices combined with social media and many of us sharing far more than maybe we ought to about our lives on a daily basis. And it just sets up an untenable situation that has to be changed.
Totally agree, Maxine. It's Luke just responding to that very quickly. I kind of see device and biometrics as being your new username and password, whichever way around you want to look at it. Your device is your username, your biometric is your password, or vice versa. We don't need secrets. These are just day-to-day inherent factors about ourselves as human beings that we don't have to remember. We carry them around with us naturally, and therefore there is no need for this secret password economy. It all exists, and it's frictionless. So yeah, totally agree.
I think this is Peter, and firstly I'd like to point out that I've done many events with Luke, and never does Luke speak and he'll give his view on all the potential things that could hack my phone. Never have I not finished one of these and gone and deleted dodgy weather apps that I might have downloaded, because it fills me with more fear than it probably should have. But I think the key thing we see is then flip that round to how you defend that in today's consumer world we live in, which is also saying, okay, we know there's a risk and we know there's all sorts of different malwares, but we also want our customer Pete to be able to take his money and do a transfer really, really easily, so that he doesn't move to this new startup that can do payments in 20 seconds. So I think the balance, and this is where we're going to move on to, is around this whole, how can you put the right level of protection, and we're talking today about 6 levels, but how can we layer on protections depending? So, okay, I can see a device being used in Syria. Okay, that's a red flag to me immediately. So that's going to make me step to a different level of protection for this particular transaction. And I think that's where it will be very interesting to see that, yes, we have to acknowledge all the threats, but if we do, the sensible thing when I listen to Luke speak is just say, well, tell you what, why don't we just not have digital? But obviously, that's not where we are in the world, and that's not what a financial institution can do today, and thus, how do we make sure that it's good enough to get rid of as much of the fraud as you possibly can, but easy enough to use to allow the consumer to want to use that financial institution's device?
So Peter, can I pick up on... Sorry, Peter, can I just pick up on that for a moment? Because I'd like to shift that debate that we were just having there into the context that you picked up on. So there is one bit of me that says, wow, I listen to the level of sophisticated fraud that we've got here, and the way in which the new technologies and the fraudsters are, working at the same pace, if not slightly faster, than the developments in the market. And of course, identity and data is at the heart of all of this in terms of moving money and data and so on again. But so let me just again put it back to a sort of a lower base here. Firstly, how are the regulations and the new initiatives that are coming from the industry, how are they helping this, and how are they contributing to what we're trying to do here? So if we can start with some insights on that, then I think there's a few more points we want to pick up on the back of that, particularly with some of the questions coming in from the listeners. So Peter, your view on the regulation side of it.
And I'm very glad you said regulations and not regulators, because AimBrain's a very global business, so we have conversations about regulation in many different countries and regulators in many different countries, and be it a central bank or whatever you're dealing with, how are they trying to make sure the banks work in a certain way that deals with the risk is one point. And, we could go on to everyone's favorite subject of, PSD2 or GPR. There's a number of different things we could talk about. But actually, I want to take a step back for a minute and say, look at some of the global regulations around payments. And for example, the most recent one, and this is a week old, and someone, whenever I say these things and make a point that it's the most recent one, someone comes up with 2 that happened that I missed. But look at MPP in Australia, so real-time payments in Australia. All of a sudden, you're a financial institution and you have 15 seconds to say this payment is being done by the right person. Now, that's a great piece of regulation, a great piece of market advancement if I'm a person sat in Sydney and wanting to make a very quick real-time payment bank to bank using my banking app. That's great. But if you take a step back, suddenly the bank has got to think, okay, well, how do I in 15 seconds make sure that, hey, this is definitely Pete's device, happy with that. We now know it's Pete using that device, and if we're not quite sure, how do we step up and double check? So my first point is that very positive regulation around the market moving forward adds a huge burden to the financial institutions in terms of technology. And then the second point being, how are the regulators bringing more and more protection to the market to make sure that things happen? So the obvious one there being the stronger customer authentication under PSD2 that looks at these different levels of authentication, which Luke and I and Maxime are talking about 6. They talk about the obvious 3. And before I go much further, Maxime was about to jump in on a point that I think I know she was going to make that would link into this quite nicely. So, Maxime, did you have something to add there?
I had to unmute myself there for a second. Actually, what I wanted to jump in on was talking about this concept of frictionless experience, because I think it's not a question of frictionless experience. And I think the point you were just making about, instant payments is quite relevant. It's a question of applying the appropriate level of friction based on the risk or the value of the transaction. And so I think that's really critically important. And when I'm on the tube in London and I'm using my phone to process my fares, I don't need a whole lot of friction. If I'm going to go into my bank account and transfer $10,000 to my good friend Peter, then maybe I want a little friction. So I think that's really a critical piece. How does that relate to the construct of the level of transaction and the other parameters of the transaction? Someone mentioned, if someone's coming from Syria. So that's one piece. And then what is that? What is the risk that the organization that's processing this transaction is understands about it, and so what level of back-end processing in terms of authentication and authorization needs to be applied?
Because that's so true. Again, sorry, it's Peter. One more point on that. When people in our market talk about step up, so, hey, guess what? We think there's an issue. We're going to step up to another level of authentication. They sometimes forget that far more often, and the far better consumer side of that is step down. So I without mentioning names, there's a very easy transaction I had to do the other day that was really, really hard that biometrics would fix in seconds, and that was I bank with one of the large global banks. I have their banking app, and I switched to an iPhone 10. And when I deleted the app, got my new phone, and put the app in that new phone, quite rightly, the device space score was, hey, there's an issue, this is no longer the device. Now, what they then made me do was a journey where I had to call customer support and I had to go through a process, and then they gave me a new code, and eventually they linked the new banking app to the new device. I put it off 2 weeks because I don't like having to make the call, and it took about 5 minutes. But our point being, if you had the device tracking, that's fine. You then say, oh, hang on, it's no longer that device. If you were then to step up to facial authentication, so server side that says, well, okay, we're not sure about this device, but we do know what Pete looks like. You looked at Pete and you had a positive match. You could then immediately step down and say, okay, fine, let's link that device to that mobile banking app to that device. So while we talk about step up and stepping up when there's danger, what we hope is that 99.999% of the time you're stepping down to say, oh, actually there's no danger, let's let the consumer go on a much easier journey.
Peter, it's Gary here. It's a very interesting point. And there's a little sort of theme coming through some of the questions here, which I think it's just worth asking for a comment on, starting with you, if I may. The questions that are coming in around the authentication and security and so on, if I may say, are very much based on today's method. How can we improve what we're currently doing? Yeah? And yet, what we're really talking about here as was said before, is that the whole manner in which biometrics challenges and changes the way that you can identify who it is that you're dealing with through the device that they're using is changing. So I know we're going to talk a bit more about the paradigm shift in the market, but what's the level of sort of readiness that you see and understanding from some of the institutions you deal with, and this gap, it seems to me, from the questions and the debate that we're having between improvement to what we're doing today and yet actually a fundamental shift using biometrics. Are you seeing there's a sort of a level of stagnation between the two?
So it's an interesting point, right? So this is Peter. So if you look at the end goal, so we have because of my daughter, we have what we call the Lottie test. My 7-year-old daughter will never have, I don't believe, a one-time password generation machine on her desk like I do. So I think the end goal is very much understood. And, Maxine's been talking about biometrics for 20 years. We're on a journey where now the mainstream market understands that the end goal will definitely be using both biometrics and things like the device-based authentication that InAuth do to come up with a passive authentication process, or at least a very easy authentication process. If we talk about some of our if I look at our client base and I start at, so for example, when you go and see a very big tier 1 bank, the readiness isn't always there because they have so many different plates spinning that they need to look at, that sure, we understand we need biometrics, but actually being able to do that next week is A, not on our priority list, and B, as a bank, we're not yet there with our mindset in terms of security. However, we have a lot of smaller clients, like, there's a small bank in Dubai, Now Money, that use our facial authentication. It took their CEO 20 minutes to see the benefits of this and build a platform based on, hey, we can use facial authentication to help people log on quite easily. So I think they're the differences between if I'm a smaller institution, I get where I need to go and it's easy for me to do. If I'm a bigger institution, sure, I get where we're going. Do I think we're ready today? I think that's a harder question. But I think if you look at the slew of smaller banks, digital-only banks in the UK or across the world, I do think that they're going to start adapting technology very, very quickly that absolutely pushes the tier 1 banks, tier 2 banks to adopt technology much quicker because there'll be a consumer-led demand process.
Yeah, Peter, Luke, adding some comments here. I completely agree, and trying to bridge that gap between some of the questions and some of the statements we're making. I think it's been hard for some of the financial institutions and the organisations that we work with. They see the types of fraud growing. They hear scary statements like some of the ones that I've made and some of the technologies that are coming. And it almost take a bolts and braces approach. Let's add on this little bit of technology. Let's add on this authenticator. And actually we end up with a mix match of everything, and it doesn't all necessarily work in concert with each other. I think with regulation, sort of PSD2 that's come down the line, we have an ability to reset the playing field. Everyone is going to have to adhere to this and make sure that the fraud remains at the lowest minimum possible whilst allowing the consumer experience to go through. So if we think about this level playing field now, the banks can sit back and say, all of my peers are going to be doing this. Let's invent a really innovative and strategic way of going forward. We've seen this happening in Europe with the onset of all of the challenger banks and third-party payment providers that are now starting to hit the market. And there's going to be lots of new ways of engaging with there are going to be new ways of engaging, and most importantly, lots of new ways of generating revenue. The established institutions clearly also have the same opportunity as well as the challenger banks and have significantly stronger financial backing to succeed. Now, for the risk and authentication side, I see technologies such as your technology, Peter, on the behavioral biometrics and device recognition side will allow digital journeys to happen without the consumer feeling any burden from cumbersome risk checking. Banks will know that the devices accessing their mobile, online or wallet interfaces are good and which ones should be blocked. and it will also know the exact behavior of their customers and the behavior of a fraudster, a bot, or a script. And all of this authentication takes place behind the scene without that customer journey being impacted, and therefore removing the need for that password generating machine on your desk for your daughter.
So can I just come in there again, because I just want to draw out the fact that it's been quite useful, and you've all raised the point of, rather than stepping out what we've got today, to use that phrase, the way that biometrics plus device is growing and developing as a technology and as an approach is where we're shifting to. And I think the response that I would give to a number of people that have raised a question around it isn't so much about enhancing what we've got today and improving that. It's about fundamentally thinking differently about this whole subject and making it almost front and center in terms of the engagement that you have with the institution, not only to satisfy and mitigate the fraud, but to ensure that you are improving the customer experience, and to use Maxine's point, in the way where if there's friction needed, it's a benefit, it creates trust. And you can currently remove those obstacles that are just basic bad processes. So I think to all of you, I'd say thank you for raising those points there, because it is real shift. And in a sense, Maxine, can I come back to you, because you started raising this in your introductory comments. We've clearly touched on a number of the technical instances of where things are currently today. But you said that this is a fundamental industry sort of paradigm shift. And I'd like to hear some more from you on that, because how is this going to happen collectively as an industry, and how are we going to drive forward this in a collaborative way, but still allow the competitiveness that we need here? So how is this going to play out, this paradigm shift from the industry? How do you see it happening, Maxine?
Well, I think, one of the interesting points, and Peter and Luca both raised this issue, which is that the larger financial institutions have a much more difficult time having a much more difficult time making the transition to what I call it, from a secrets-based security framework to a truly identity-centric based security framework. And for me, when I say identity, it really is about the biometrics piece. And when we talk about this notion of requisite friction, for many, many transactions, device-based authentication is a perfectly legitimate method of authenticating a transaction. And as you move up the chain to riskier transactions, obviously biometrics come into play. And so when I think about this notion of paradigm shift, what I think about is, this idea again of identity-centric, and identity-centric, truly identity-centric from my perspective, is biometric. And Peter mentioned earlier that they have a biometric identity as a service platform. And what's critical about that is that you are enabling this identity authentication to happen independently of the device. And while the device is important, we all know, in Peter's example, he changed his device, right? So you have to have both device-dependent authentication, and you have to have device-independent authentication, and that's where biometrics comes into play. And I think part of what we're seeing now, and I think this is an important step in the evolution of this paradigm shift, is the acceptance of device-based authentication, biometrics on devices, which is terrific, and I think it's making a difference today. I think there's a problem, and again, Peter talked about this, with the larger institutions that have a much more structured legacy IT infrastructure, is making that shift. And I think a lot of those organizations to date have wanted to purely push that authentication, what they call out to the edge, and to wholly depend on the device. And I think that in the long run, they're going to have to embrace a more holistic approach that enables them to apply, again, the requisite level of authentication based on these 6 factors that we've designated, and that the ability to authenticate biometrically is on some level linked to the device that we know is central to our existence, but also allows for some flexibility because perhaps I'm logging on my PC, or I'm actually, I know it's strange, but you're going into a branch to do some kind of transaction or going to an ATM. We should be able to have an omni-channel experience. And in order to do that, you really have to disassociate the biometric authentication from the device in that regard. So it's really contextual in terms of where you are in this process. And I think making that transition is much easier, obviously, for newer fintech companies that don't have this legacy infrastructure that they're trying to manage. I also believe that the larger financial institutions are going to have to make this transition. I think they understand that. I think it's just a significant investment and it's painful. But, you know, banks are more and more, as most other enterprises, are becoming more and more software dependent businesses, and so they have to start thinking that way. They have to start adopting the innovative development cycles that are going to be critical for them to maintain their competitive positioning in a market where, as you know, as Luke and Peter both alluded to, again, it's the customer experience is driving the marketplace. And if you can't stay up, if you can't keep up with those expectations as an institution, then you're going to have a tough time competing.
Thanks very much, Maxine. It's a good positioning of some of the strategic thought and some of the challenges that have. One of the points that crops up on the back of that, and maybe I could go to Luke for this question, is just we understandably know that the bigger financial institutions have perhaps more of an acute problem evolving and changing to a more biometrics-driven digital environment. But of course, what they do have is they have all the customers. So all of the newer entrants can adopt the new technologies, but they don't yet have the customer base. And it's the customer base that the large institutions have that we want to shift. And some will want to be shifted into this new age. So how do we think about some of these large institutions really getting to grips with some of the points that Maxine raised there, and not just look at these things from a compliance or a risk or indeed a customer point of view, but fundamentally shift into a stage where they can be truly digital and truly sort of biometric driven in terms of their authentication and device management. Your thoughts on that, Luke?
Yeah, certainly, Gary. So one thing I'd like to add that the big banks have, aside from the customer base, which I think they're doing a good job at keeping, is they have a lot of data. So they know what these customers are doing, they know their behavior, and with that information, they are able to make more informed decisions, whether it be a risk-based decision or something around a product that customer is able to be marketed or use. So I think they have a natural advantage. And I was reading a report the other day that actually looks at the neobanks and the challenger banks. They really need the support of the major banks. The major banks are starting to do the exact same offerings as these challenger banks today. And I think what we'll see is a little bit of consolidation within the industry. You'll get the larger players looking to acquire rather than take on the risk of losing customers to their challenger banks. I think also what I'd like to point out is that these banks are aware of the paradigm shift. We consult with them on a daily, weekly basis. And as the technology providers, we demonstrate the innovation that we can bring to them through either our partnerships or the technology that we are generating. What I'm not going to try and do here is turn this onto a conversation necessarily about mobile. We know it's going to grow and grow and grow. But what I will say is that actually what's going to drive a lot of the technology are the handset and the OS manufacturers. So if you look at Apple, for example, 6 months ago when they released Face ID, we saw Face ID failed 3 times, and then it defaulted to a password, which is what we're trying to get away from, right? I think we're trying to move away from passwords. So given that last statement, the banks, the merchants, the PSPs and the challenger banks are all going to need to think carefully around their adaptive authentication strategies, have as many factors available based on the risk of that transaction, whether it be a $100,000 transaction from London or whether it be a 50,000 euro transaction coming out of Syria. We need to have that information. The second piece, and this gets back to where I started with this conversation, is that the banks have that data. We're seeing an onset of artificial intelligence and machine learning organizations. And those tools, those algorithms that are going to run machine learning algorithms, they need data. And the big banks that already have that should get a jump start by feeding that information into those platforms. So from my perspective, I certainly see the big banks doing a very good job learning from ourselves as vendors and also what the neobanks are trying to do. But there's a level playing field, and we're very happy to speak to everyone about it.
Okay, and Peter, any thoughts from you on that subject or related?
Well, it's an interesting one to bring up. So firstly, I watched with a smile, thinking that I have now the Apple 10 or X, and I watched with a smile when they launched it, and I said they must have spent millions of dollars making sure this launch went perfectly, and it failed. And believe me, part of my last few years has been showing facial authentication in client demos in dimly lit banks around the world. So I definitely had a chuckle at that. But I think that does kind of lead me on to something that is very interesting in terms of the kind of consulting around biometrics. So it's a good one for you to have brought up, Luke, but definitely the real life issues. I think there's technical answers to biometrics, and the technical answers, you can get deep into equal error rates and you can get into how you do that. But there's also the real life use cases. So what do you do when a customer tries to do facial authentication in a dark room, and they do. What do you do when someone tries to log on to a mobile banking app from Wembley Stadium when, there's 10,000 people, 100,000 people cheering with voice authentication? These things are genuine issues that banks struggle sometimes because often biometrics sits in a security department or team, which is very one-dimensional. It needs to be secure. It needs to stop this. And then you move into a risk-based approach that says, well, actually, why don't we say that there is a level of fraud that would be acceptable? Now, that's a hard concept. Now, why don't we say that, hey, as long as you've got a score of this, we think the convenience is more important than the security. Now, that's hard when you're talking to a bank that's 100 years old and has the people who are worried about convenience in a different department to the people worried about security. When you get to, and Luke brought this up, the new digital banking offerings, you're often talking to one person who's looking at convenience and looking at security and can in their mind say, well, of course, we need to balance the two. We don't want security to be so good that we have zero fraud but no customers, and we don't want convenience to be so good that we've got lots of customers but they all leave because there's so much fraud. And that's that balancing act in kind of summary to the point that Luke kind of raised.
Thanks. Thanks very much. Maxine, any final thoughts from you? Because I know we're going into the final 5 or 6 minutes, and I just want to sort of wrap up on a couple of points. But any response to that from you, Maxine, as we started with you on this paradigm shift?
Yeah, I think Peter makes a really good point, and paradigm shifts are complex. And so I think in his comments, for me, he gets back to this fundamental issue, which is we're trying to take people that have been operating in a secrets-based world, and secrets either match 100% or they don't. Secrets either the right secret or the wrong secret. A password is the password or it's not the password, right? So it's an either or, and in some respects we've all come to expect that is the way security operates. And when we're moving to a multidimensional security paradigm, we're no longer looking at that kind of precision. We're looking at thresholds, as Peter mentioned. How do you balance the need for security and convenience? And it's not an easy thing. and it's going to take some time to really understand how to finely tune those solutions. And even within individual organizations, there's going to be a balance, and every organization is going to have to figure out how to do that. And that's why, having folks like Luke and Peter to help vendors and, help end users through that process is so important, because this is new terrain. And so we have to figure out how to solve those problems, but that's where we're going. So falling back to this, well, I just want to go back to where it's 0 or 1, and I know the answer. It's not a realistic way to conceptualize security in the future. Security in the future is going to be based on these kind of multidimensional thresholds. So machine learning, artificial intelligence, all of these things are fundamentally changing the way we're operating, and that kind of change is not necessarily comfortable or easy, but I don't think we have any choice. I think we're already down that road. So the question is, how do we facilitate that transformation in a way that improves the customer experience, increases the security, and increases the profitability of the organizations that are engaged in this process.
Maxine, that's a very good note to draw a conclusion from. Some of the questions that have come in have really been about this shift between stronger versions of what we have today and the new world in which we're talking about, the security versus the convenience, the move away from just a purely secrets-based approach, the need for some smart fintech technology linking into established banks to drive this forward, particularly using data, and this balance between the customer expectation and use of device to manage transactions versus the need to compete and conform to the growing level of regulation that sophisticated fraudsters are trying to hack into. So I hope that everybody that's registered here feels that we've widened this debate out sufficiently to capture some of your thoughts and points. And I really would like to thank Maxine, Luke, and Peter for a very insightful, open, far-ranging discussion that we've had on this subject. And again, thank you to everybody for registering. And I'm going to hand over to Luke for a few final words. But Luke, you have to do one thing for me, okay? And that is you have to please restate the 6 levels of authentication, because that question has cropped up several times. So I think the audience and the listeners are quite intrigued just to hear the deployment of the techniques that you have together to look at how the 6-factor authentication between InAuth and AimBrain comes together to manage this.
Absolutely, Gary, and very happy to go into some more detail just for the start of the webinar there, not wanting to get too productized with the conversation, actually stay at the wider industry level. So we've heard Peter, Maxine, and myself talk a little bit about the balance between authentication and risk and the customer experience, and this is the problem that we're solving for. And the InAuth and AimBrain approach has been an innovative approach, but to look at how can we create a workflow of as many factors as possible that will allow the bank to say, okay, I have this type of transaction, it's high risk because it's coming from Nigeria, what levels of authentication can I apply to that? I have a low-level transaction that Maxine explained, for example, I'm on the London Tube and I'm just tapping in and tapping out, what authentication do I need for low-value payments? And what we've done here with the 6 factors, and I'm going to go through them right now, is give banks, give institutions that option of picking and choosing and creating a workflow that suits the transaction and the consumer's requirements. So from the top down, those factors would be through the AimBrain integration we have. That's the face biometric, which I think Apple have shown us is going to become the standard style of biometric. We have voice biometrics, which opens up the true omni-channel nature of biometrics through the call centers. And then we have the behavioral biometrics, which is the true passive biometric, of course, that really happens with no change to user experience, happens in the background, and enables the bank to get a good feel that that is the genuine customer using their device. Then we look at the InAuth side and what we add from the device The first thing is our device authentication. So we are permanently identifying every smart device that we see. So now that the banks that we work with can say, this customer who uses device 123, device XYZ, and device 789, which is their Android, their iPad, and their laptop, we know that they're the good devices, and every time we expect that customer to be using one of those devices. If not, then I'm elevating the level of risk. When we talk about elevated level of risk, and the next factor, the fifth factor, that would be our transaction risk analysis. So we have rules and risk engines that we can look at thousands of data parameters to determine the level of risk. Things like geolocation, things like is the language in Russian, things like the battery power even. Battery power is a clear indicator of fraud when a transaction is being completed, because if you think about it, your battery power should only ever be 100% at 5:30 in the morning when you're getting out of bed. At no other time is that true. And then finally, on top of the device and the risk-based assessment, we have our two-factor authentication service to send notifications through an encrypted channel to the mobile application to validate some form of behavior, rather than receiving an insecure, cumbersome text message that you have to enter into a different interface. I can simply accept a behavior or a transaction through the click of my button within my banking app, and therefore the transaction is approved or denied if it was indeed a fraudulent transaction. Many different use cases for that, certainly around PSD2. So there would be the 6 factors. I'm very happy to answer questions via email through the attendees post this if there are deeper questions on that. But I'd just like to say thanks to yourselves, Gary, Finextra, for organising the event. Thanks to Peter and Maxine, especially for getting up early. And hopefully we've had a good debate and some food for thought. Look forward to speaking with everyone in the future.
Luke, thank you very much for that. And just to confirm that the questions that have been given to us will be passed across to Luke and to Peter, and they will respond in due course. Thanks to everybody for quite a wide range of very interactive debates and comments and questions. And all that remains for me to say is, once again, thank you to Maxine, Luke and Peter for your contribution. Thank you to everybody for registering, and I hope you've enjoyed the online panel discussion. Thank you very much indeed.